Thank you for the 2 or 3 people who left in the room. Hopefully there are like 50 people online, so I hope to get some activity from you guys. It's an honor and privilege to be here. Thank you, Jeffrey, Paolo, who just walked out, Anushka, and the rest of the ITPA gang for making this happen, long overdue. Like everybody else in the room and online, I work with private clients and families who are exposed to multiple jurisdictions. I guess what makes my practice slightly different is that probably 99% of my clientele are US exposed, either inbound or outbound. I split my time between South Florida, North Miami Beach, and Singapore. And if I'm not in one of those 2 places, I'm in Dubai or Portugal. So I like sunshine, and I practice what I preach. I'm a US taxpayer as well. So what happens impacts me not just professionally, but personally as well. So what I'll do is kind of like set the table, right? And 100% aware that most people will be more or less familiar with the concepts. But okay, let's go back to the first Trump presidency. So in 2017, we had the Tax Cut and Jobs Act, which arguably was the biggest overhaul of the US tax system since 1986 under President Reagan. So it was huge, it was big, right? As the gentleman himself would say. Essentially what it did, it was a reduction in taxes. On the individual side, it was less pronounced, but it still was material. The headline, the highest marginal tax rate went down from 39 to 37, but a lot of deductions were enhanced. So like child tax credits, standard deduction. The point is that the tax filing process became slightly simpler. And for the average American, they saw the effective tax rate go down. Where the action was on the corporate side, as we all know. So again, I'm gonna call headline corporate tax rates, but nobody pays that, right? Because of all the deductions and stuff. But the headline corporate tax rate went down from 35 to 21. And then acknowledging the fact that in the US, probably half of the business income isn't declared on corporate returns, but on various pass-through structures. There was some generous benefits on that side as well. So there was a Section 199 Cap A, which led to anyone who had some sort of partnership, some sort of pass-through structure, they also saw a material decrease in their effective tax rate. So for corporations, it was a big win. In addition to which, you had a whole bunch of acronyms, which I probably don't need to go into unless someone wants to take a deep dive into it. But what it effectively did is it led to the US inching towards arguably a quasi-territorial tax system from a corporate point of view. So before, definitely worldwide. Now you had GILTI, you had BT, you had DRD. But the point is that there's some unintended consequences. It was a bit clumsy. Some people were negatively impacted. But generally speaking, you had what seems to be a territorial tax system for corporations. So that I think really is it. And unfortunately or fortunately, depending on how you're looking at this, it expires at the end of 2025. So if Congress doesn't do anything about it, it will return to what it once was in early 2026. So a lot of the debate and discussion and the narrative really is about ensuring that this gets extended, right? There's also the issue of tariffs, which came up on the campaign trail, which I'll touch on. Let's put a pin in it, and I'll come back to it later on, right? Yeah. Now I want to talk about, and again, if there's anyone, and I know there are some US tax professionals either online or in the room, right? I know I'm going to be grossly simplifying the process, right? But unlike, let's say, in the UK, where the executive tends to overshadow the legislature, so first past the post, you come in, you can more or less do what you want because you obviously control parliament as well. In the US, you have something that inches towards a more aggressive separation of powers. So the Trump White House wants what it wants, but it has to negotiate with Congress, has to negotiate with the legislature. Now, there are different ways in which this can happen. What most so-called experts believe is going to happen is this budget reconciliation process. It is ridiculously complex. I'm not going to attempt to break it down just at a super high level. The budget is set on a rolling 10-year cycle. And what the relevant committees do is that they agree what, in this case, the target deficit would be. And then that creates a ceiling. And now it's up to the policy makers, those who actually write the policy, who write the tax laws, to do so being aware that there's a hard ceiling. So obviously, why I'm mentioning this, it's to say that, yes, the executive could want what it wants, but there'll be a lot of negotiation on the floor of Congress, right? So they estimate, those who have evaluated what he said on the campaign trail, estimate that you're looking at a 2035 total deficit of around 61 million, of which 7.5 to 7.8, depending on who you're looking at, is going to be exclusively with his tax policies in mind. Now, in terms of the proposals that increase the deficit, obviously, as I mentioned before, it'll be an extension of the TCJA, the Tax Cut and Jobs Act, with the massive tax cuts. There's some other stuff there, but that's mainly domestic. We're concerned with international, right? Now, and here, I know I'm going to get controversial, I apologize, right? So in order to balance that deficit off, you have these tariffs. And I've seen the front page of the New York Times today as well. So I know it's a big deal. Canada and Mexico are included. It may come as a surprise, but then if you carefully read and listened to what was said on the campaign trail, it should come as no surprise. It's going to hit everyone, 20% or 25%, depending on who you're listening to. And then, of course, China is a special target. You know, it is what it is. Of course, then you kind of move away from pure tax policy and more to game theory, right? Because obviously, if you implement some sort of tariff, there will be retaliation. And if there's retaliation, then that will impact on your domestic exporters, right? And then they're going to come crying to their elected representatives and say that, well, why am I being punished for what's going on beyond my control? And then you may have to offer them some sort of relief. And there'll be negotiation going back and forth. So this is going to be a moving target. And I guess this is, again, from a tax point of view, where I guess you're going to see the most friction, and it's going to impact probably everyone in the room and their practices as well, right? But of course, this is more geopolitics than tax, so let's stick to tax. That's easier. Pillar 1 and Pillar 2. As everyone knows, Pillar 1 is about, hopefully, the withdrawal of the digital service taxes and this whole nexus thing, right? And who gets to tax what. Unfortunately, as of earlier this month, when I checked, I don't know if anyone has more up-to-date news, but there seems to be an impasse from the US side in terms of one of the technical points. So there is some concern as to whether it will go forward, at least from a US point of view. And in terms of Pillar 2, which is that global minimum tax, the irony is not lost that the OECD proposal is based on the US structure, guilty and beat. Yet, in order for the US to be compliant with the new OECD global minimum tax, it will require amendment to US domestic legislation. As to whether that will happen, I mean, one can argue, yeah, I mean, you're going to be overhauling the tax system next year anyway. Why not put in some sort of provision to make the OECD happy? But from what I hear, and again, I'm apolitical, I really don't care, but, you know, word on the ground or word on the street in Washington is that there's pushback. There's pushback. And it's not uncommon to hear some politicians say, defund the OECD. Because from, I guess, from the US point of view, Pillar 1 and Pillar 2, Pillar 1 in particular, it kind of disproportionately looks at US multinationals, right? I mean, we know this. And then from the US's point of view, well, we are funding the OECD and we're putting money in the pockets of a bureaucratic structure that's working against our nation's interest. We don't like that. I imagine we're looking at some sort of impasse, but you know, we'll see. Maybe cooler heads will prevail, but at this point in time, I'm hearing defund the OECD.